Hey guys, it's November 22nd. We're going to review Thursday and just go over the trading strategy again because I will have good days, a few good days, a good week, and I'll start getting distracted because I want more, I want more, I want more. So I want to make another video to help myself, maybe help somebody else that stumbles on this video, find a strategy that could work well for them. So first and foremost, we're looking for imbalances. Imbalances, also known as fair value gaps, whatever you want to call them, you can call them. I like to call them imbalances because as I imagine it, these areas of imbalances or fair value gaps, I think of there's an imbalance of sellers or buyers. You can literally look at your hand. You know, this is the sellers down here. There's more sellers and buyers. It makes a diagonal line from one point to another, so it's selling off. So when we come back to that imbalance, we're looking for a sell off. Just easy to remember: imbalance of buyers or sellers. So first and foremost, if there's no imbalances, we're not looking for a trade. Once we have an imbalance, we got to consider the proximity to the exponential moving averages. I really like the 9 moving average, and I like the 45 moving average. Now, take into account I'm on the 3-minute. No matter what time frame I'm on, I'm going to have the 9 EMA on there. What I like to also add, though, is the 15-minute 9 EMA equivalent to all my charts. So this blue line here is the 45 EMA, which is the equivalent of the 15-minute 9 EMA. So what it's doing is it's showing me the 15-minute 9 EMA on my chart. For some reason, price just seems to often just tag it and sell off, or buy it and buy up, tag it and buy up. So I really like that, especially when it intersects with a imbalance, such as this example down here. You have the imbalance crossing with the EMA. That to me is a no-brainer trade. It's perfect. And so when price comes up to test the imbalance, we're making sure that we're on the right side of it. So if we're coming up to it and we're looking for a sell, we need to close below both moving averages. All right. We can't have price come up to an imbalance up here and sell if the moving averages are below it, because they can work like support, and what they can do is turn your position around and send it right into your stop. So here, ideally what's happening is this is going to work in our favor. The 9 EMA is going to work as resistance, and then the secondary is going to be the 45 EMA is going to work as resistance. So if this doesn't work, we got this, and if this doesn't work, whatever, we're using proper risk management and we lose. But visually, when you're watching these trades, or when you're going into these trades, you can think, okay, I have 2 moving averages to work as resistance within my drawdown, essentially between my stop and my entry. That gives me great confidence in this trade. Let's let it run. All right. So once we got proximity, we got the imbalances, we got proximity. We want to make sure we're not trading into more imbalances, and it's the same idea. We want to make sure we're not trading into the moving averages. All right. If there was a big green box somewhere down here, I wouldn't take this trade because buyers could step in somewhere around there and push that up. So imbalance and EMAs, we got those taken care of. We're not trading into potential support here via imbalances. And then the last thing we're looking for, right? Because if we are at this point of the chart where we see price coming up, we haven't seen our signal candle yet. We have everything so far. We got the imbalance. We got no imbalances down here. We got good proximity. So now we need a candle that shows a clear rejection. We need a candle that shows sellers are clearly coming back in here again. And that's going to be our signal to enter. And so we need volume. We need more volume than the prior candle. And we need an outside close. And the reason why I want an outside close is because it shows that we overcame the last 3 minutes of buying. All right. Or yeah, in this case buying. So this is the candle here. So we can clearly see there was an imbalance made. So a lot of buyers stepped in, you know, the 12 minutes leading up to our signal candle. However, our one signal candle where we were anticipating sellers to be somewhere around came in with volume. You can see that down here, way more volume than the prior candle. And it was an outside close. So what the buyers did for the last 6 minutes, sellers overcame in 3 minutes. 3 minutes, one candle. And to me, that speaks volumes, pun intended, about what's going on with the market. It found a good area to pull back to, It found its sellers. Maybe there was a bunch of unfilled limit orders here of sellers. Maybe a bunch of passive, a bunch of aggressive sellers stepped in as well. Whatever it was, we don't need to know because the volume in the outside close tells us. And from there, you can jump in and walk away. And you can just come back to maybe a winner, maybe a loser. But whatever it is you followed your rules, so the outcome is going to be what it's going to be. You can't control the outcome, but you can control your process of trading by taking mechanical setups that are objective, right? I have my 4 rules listed down here. As long as those check out, I can take the trade with confidence, and if it loses, I'm not going to be upset. Now, if I take a trade and I bend one of these rules or ignore one of these rules and I lose, I am going to be upset at myself because I did something that goes against what I planned on doing.